All right. Thank you everyone for being here. I just want to introduce our speakers for today's call and quickly go over our agenda. Please welcome COO of New Borders, Tim Gilday,
Hello.
investigative subject matter expert, Michael Ronayne,
Good afternoon.
senior Byte team member, Ann Rytho,
Hello.
and our special guest speaker, Vice President at Needham Bank, John Mack.
Hello.
Now, for today's agenda, we'll start with a presentation from John just on some due diligence, risk, and mitigation strategies. We'll then hand it over to Tim and Ann to show how Byte can assist with trade compliance, as well as review our analysis of Russian gold exports. From there, Ann will present a few product updates that have been made to Byte over the past month, followed by an enforcement roundup from Mike. If you have any questions, feel free to throw them in the chat. And we'll end with a Q&A before closing. So once again, thanks everyone for being here. I'm going to turn it over to John.
Thank you, Eric, and I want to thank the New Borders, and Byte team for having me. It's always fun for a BSA AML person to talk about what they do. We are geeks about it, and it's always very fascinating to us. So today's topic, we are talking about gold, and gold is something that is very ripe in terms of the ability to launder money, in terms of terrorist financing and proliferation financing, because gold is one of those things where it doesn't matter what it looks like, it doesn't matter what form it's in, it holds its value wherever it goes, right? So whether you have gold bullion, whether you have gold chains, rings, whatever, it will hold its value based on its carats and its weight. So there's been a lot of, obviously there's international sanctions against Russia, and I think one of the topics of conversation today is definitely the movement of Russian gold from Russian ports into the Middle East and into Turkey. What we've seen, and most recently was the African Gold Advisory, which was a multi-agency advisory with pretty much all the three-letter agencies in the U.S. government, specifically talking about gold in sub-Saharan Africa. And they also mentioned the Wagner Group multiple times in that advisory. The interesting parts or the key takeaways for me, I guess, from that advisory is the suggestions on due diligence and what players in the market need to do in order to make sure that whatever gold they are buying, recycling, or trading is gold that is not involved in conflict areas. It's not, it's not coming from a different source than what diligence is the way and the tool to check how that's happening. And Anne will later show how Byte is able to do that. But some of the things that are both red flags and things that the Gold Advisory, the African Gold Advisory from June of 23 talks about, and then also going back to the FATF, money laundering, terrorist financing, and risk vulnerabilities associated with gold that came out in 2015. It really comes down to due diligence, and it comes down to a lot of standard typologies in the AML CFT world, right? It's know your customer, and to some extent, it's know your customer's customer, right? So if you're a bank that is involved in international trade, you're going to have various systems to check OFAC, but you also want to make sure that the customers you're dealing with, as much as they clear that list, whether it's the OFAC list, the UN list, the OFDI list, it's their customers also clear those lists, that their vessels clear those lists, that there's not a transfer of goods at some relatively neutral port, because you will still be responsible for that. What we've seen with the U.S. regulators is if there's information that they believe you could have known, then they're going to say that you should have known it and you should have acted on it. So certain red flags that you should look out for in terms of if you're the whether you're banking the customer, you're underwriting a shipment, you're trading the commodity, it's the customer's behavior. Are they erratic when opening accounts? Does the behavior make sense for the operation, the size of the operation? If they have one gold mine in sub-Saharan Africa, and it's relatively small, but they're selling tons and tons on the London or through the London Bullion Exchange. Stuff like that. That's the kind of the typical red flags you will look out for. Also for drug trafficking typologies, human trafficking and stuff like that. How long has a company been in existence? Who are those beneficial owners? Do they have the expertise for that industry, or does it seem like it's a company developed just as a shell corporation, essentially, to move goods through? There's also the trade-based behavior. Does it make sense for the customer to be shipping goods from that part of the world? Do they have the right invoices? Do the invoices match up to the shipments? I don't necessarily think it's beyond the realm of the regulator's expectation that every once in a while there would be due diligence done, to the extent where you would have a banker go and with the customer to go and check a shipment to make sure that what's in the container is what's on the invoice, right? Especially in trade finance, if you're, fronting a company, $100 million to buy X amount of gold, I think that it's not beyond the realm of reason to want to go out and double check that shipment. But then we also have, and this is I think where Ann's demo might help out a lot. There's a huge industry in terms of the recycling of gold going on in sub-Saharan Africa. So you have the gold maybe coming in from Russian ports, it's coming from Vladivostok near the North Korean and China border. It's going down into the UAE, which is a huge importer from Russia. But then they're recycling it in plants so that even if it has whatever stamp the Russian gold bullion would have on it, now it doesn't. Right? They're converting it into different bullion, different stamping on it, and essentially they're integrating it into the regular gold market. And the gold market, as both the U.S. government and FATF have said, it's a cash-intensive market. So once you have that, the money laundering part is actually, for the launderers, it gets easier, right? You have sub-Saharan Africa, which is very open to corruption, or known for corruption. It's the regulations are kind of lax. And then you have these other markets that are very willing to buy from these places and even encouraged to buy from sub-Saharan Africa, where you could have a lot of illicit gold flooding the market, which then ends up funding a lot of illicit activities. And again, the Africa Gold Advisory specifically speaks about the Wagner Group. And I think in that advisory, there's something like 6 or 7 different specific entities that they associate with the Wagner Group that have had some kind of action against them, or they were involved in, whether it be human trafficking or labor law violations, which also are very lax in the gold mining industry. So there's a lot to kind of unpack there, but it's all something that can be unpacked. It takes a lot more due diligence, and I know that the lending side of any financial institution might not want to hear that, because it's just more work and more consternation for the customer. But ultimately, you're saving yourself from regulatory findings, and you're also helping to stop, money laundering, terrorist financing, and proliferation efforts. So just some of the other red flags that kind of stand out in this industry are the over or under invoicing, which for anybody familiar with trade-based money laundering, it's really the same idea there, where they're saying there's a lot more than there really is, and there's an overpayment of goods. And that's one way that they get what seems to be legitimate cash into the illicit industry. The rapid movement of funds is always a key typology in almost any BSA or AML space. If they get cash in, and then they wire it out within the next day with the same amount, that's probably a red flag you want to look at. Additionally, if you're buying gold from, the DRC, but they're telling you to, pay an account somewhere in Cyprus, that's something that you want to look out for. That's definitely a red flag. And overly complex business structures or business transactions where, payments are spread to multiple people, even though there's just one shipment coming in and stuff like that. Something to look out for on the transaction monitoring end. And I know I'm probably talking a little fast, but I know we're also limited on time. Just to get into some of the mitigation strategies here, in my opinion, the most important mitigation strategy is implementing a rigorous due diligence program, which includes procedures for customer onboarding, transaction screening, and transaction filtering. That's probably the key for any financial institution, insurer, commodities trader, because that due diligence program is going to help you know your customer and really understand what the flow is supposed to look like in that industry. You also want to continue, you continuously monitor customers and their transactions. You want to risk rate your customers and do enhanced due diligence on kind of a regular basis and have that baked into your policy. Regulators will expect that. Internal auditors will expect that. You obviously want to develop, implement, and maintain a robust AML and CFT compliance program that adhere to whatever standards there are in your country, but also generally, look at the FATF recommendations, the EU directives, because whatever country you're in, you have some FIU, whether it's, in the US, we have FinCEN, they're going to have their own regulations, their own expectations, and you have to really conform your program, your modeling to what they require of you. And in my opinion, you always want to go a step further, because you're also trying to protect your own institution from the risk associated with dealing with these bad actors. You want to maintain comprehensive records of all transactions, including the source of funds, the parties involved, and any due diligence you have on the counterparties that maybe are not your customers. You ensure documentation is accurate, complete, and it's relevant for your regulations. You need training for your staff to make sure that they know what red flags to look out for, that they know how to use whatever technology you have, whether it's your transaction monitoring, your sanction screening software. Your staff needs to know how to use it. They need to know what they're looking at, how they should look at it, and how to mitigate or escalate activity. Conduct periodic risk assessments, which is also part of due diligence. Not just risk assessments on whatever products, services you offer, but also on your customer base, on the look at their geography. There's plenty of information out there between FATF, Transparency International, and others that risk rate countries and give really good detailed analysis. I mean, even the CIA fact book is a great resource for country specific risks. And then lastly, I would say, use a mature sanction screening software that not only is, I guess, easy to use, but also gets updated on a regular basis. Because the worst thing would be, you have great software, but they only update it once a month. Meanwhile, the regulators update it, twice a day. Which after the Ukraine and Russia, after the Russian invasion of Ukraine, that's been actually kind of common, where there's been almost daily updates to various sanctions lists. So I know that was a kind of a quick hit with a lot of information, but the name of the game is due diligence. And if you're able to know something, you should know it. So if there's software out there, if there's information that you can gather, subject matter experts that you can speak to, you should be. And that's going to be the expectation on regulators, internal audit, and I would say, heaven forbid, there's some finding against your company, whatever documentation you have that you've done the due diligence will help protect you and mitigate any negative consequences there. Again, I know that was kind of fast, but that's kind of my story. So
Thanks, John. Really appreciate it. So now I think we're going to turn it over to Anne and Tim for a product demo, just to continue the conversation on due diligence.
Thanks, Eric. And thanks, Jonathan, for going through that. And I think you set me up nicely here to jump into our app and just to go through the demo and also talk about some of our product updates. And like you said, we are dedicated to regularly updating the lists that are available and the lists that are already in there. So I will walk through the modules first and then go through some of those updates. So starting with the modules in the Byte app, we offer a variety of modules to assist customers in managing trade risks effectively. So the first module is the watch list. This is available for free to anyone, and you can go in and search against multiple watch lists, global and US based, and many of these are updated actually hourly. We're checking for updates, so making sure that you always have the most up-to-date information here. So you can see, you can filter them by government agency and by list name, and the total count here. Headed back to our homepage, we also have the Byte list. This allows users to access and screen against second and third tier entities. And, we also call these transshipment points or transshipment entities. And the difference here between these two lists is that the watch list comes from official sources like government agencies, while the Byte list is proprietary. You won't find this list anywhere else. This is generated with our AI model that's then vetted by subject matter experts and listed here. We will get into that a little bit further and how that process works when we go through our use case. Byte trade protection allows users to search and review commodities and HS codes that require additional screening. So we have filters in here related to forced labor. We also have patent data, registrations and filing, so you can search and see if an entity has been subject to any penalties, and that's all available in the Byte trade protection module. The Byte cyber module allows users to access embargoed IP addresses and also explore known exploited vulnerabilities in software. And the Byte Analytics Vault, again, Jonathan, you set me up for this. So here you can maintain a paperless audit trail and track your due diligence. So you can store anything in here. You can store your due diligence in an online source. You can share it with your team and keep that there in case anyone does come asking about your due diligence process. The Byte score that's coming very soon, it's in final testing stages now, evaluates the risk of doing business with an entity or entities using a scoring system. So this runs, this is an AI model that incorporates all of these lists into one, and it returns the number of hits and seamlessly brings together that AI model with our, again, subject matter expertise of the company. So also on the homepage, just quickly, keeping everyone updated on industry news down at the bottom. And all of the data available in the app is available via API also. So if you have a system that you are already using and you want to run your data against our system, that is available. So also coming soon, in addition to the Byte score, are our playbooks. So playbooks are go-to guides for using Byte effectively. They map against regulations and statutes for specific industries and domains and provide clear tutorials on how to stay compliant. Headed back to the app, some of the new lists that we have included recently include the EU's recently published the European Commission's high priority battlefield items. So that's available in our trade protection module. You can search by product description or HS code and return anything. It will return if it's on that list. Also, the Department of State's Freedom and Counter-Proliferation Act related to Iran, also available in our trade protection app. There are, as I mentioned at the beginning, the watch lists are updated hourly, and then some are updated daily or weekly, depending on the frequency of updates. And our Byte list is also regularly updated. We recently added over 40 new entities associated with gold exports from Russia. So again, if you are working in the financial industry or looking at trading gold, those entities are on the bite list, and you can search them today. And I will stop sharing my screen here and hand it over to Tim to introduce the analysis that we did do, and we will talk through that together.
Sure. Thank you, Ann. Thank you, John. As John described earlier, it's very important to conduct transactional due diligence when possible to look at high-risk transactions. And one thing we focused on this month, given the gold advisory that came out by the U.S. government, EU restrictions on trading with Russian gold, and also U.S. restrictions that mirror those, we thought it'd be interesting to take a look at international trade data and look at trends and patterns before the invasion, post-invasion, pertaining to gold shipments out of Russia. And we have some interesting findings that we want to share with you that we've been looking at. And you want to show us and share your screen?
Yes, yep, there we go. Thanks, Eric. So one of the primary findings that one of the primary insights, I should say, that we discovered is just the change in destination country. So prior to the invasion of Ukraine and a lot of the passing of these regulations, the major country receiving gold from Russia was Great Britain. So you can see that long blue line in the middle. So the blue is 2021, and then the gray is 2022. And this is divided by country, destination country. So we can see that the, Hong Kong, Turkey, and the UAE popped up quite significantly after the invasion. We also then started looking at the different parties involved in these transactions. So we saw quite a few, a majority of the exports were associated with a logistics company in Russia. They also have a location in the UAE, and it's called TBSS. And they followed a similar trend in moving from exporting to Great Britain to the UAE. And we also saw TBSS acting on behalf of a number of Russian banks, 3 of which were then subsequently listed by OFAC after those transactions of gold exports. We also so the entities that receive gold from Russia and from TBSS specifically, we then listed on the bite list. So these are entities that are receiving gold from Russia, and we are not alleging anything, and I'll let Tim, as the subject matter expert, speak to that more. But we found a lot of these entities we could find limited open source information on, or some of them were a commodities trader who said they traded in agricultural commodities, but they were receiving gold. So again, just along the lines of what Jonathan said about some red flags. Tim, do you want to speak to that anymore?
Sure. As John described, one of the red flags we'll look for is a company that is trading in a new commodity type. In this case, we saw a company in UAE that dealt with agricultural products. And post-Ukraine invasion, they started receiving high-volume gold shipments from Russia after the restrictions have gone into place as well. So we see that as high risk, given that it's a transshipment country. It's a commodity subject to EU and US trade restrictions, and they have no experience in that trade sector. They've been added onto the bite list. They will not be on a US or an EU denied party list, but from a due diligent risk management perspective, we think it's important for companies to understand their affiliation with these restricted entities, so they're added on. Also, as Ann and Jonathan have touched upon, we see trading companies not necessarily involved in any specific sector, but all of a sudden we see a large spike in Hong Kong with companies trading in this Russian gold. They were added as well. So we have 40 odd companies just associated with this logistics provider, TBSS, that have triggered some type of suspicion pattern or anomalies in their trade that put them at a high risk category, and they've been added on. And we do this across a number of different areas, be it US export controls, EU controls. They all get captured by our AI platform and our subject matter expertise. We analyze it, we vet them, and then we add them on to the list for your due diligence purposes. Thank you, Ann.
Thanks, Tim. And I think, Eric, that brings us to the end of our analysis and our product demo.
Great. Thank you both so much. We're kind of reaching the end of our time here, so I think we're going to close it out. I don't see any questions in the chat, but I just wanted to say thank you to John for joining us today. We really appreciate your insight, and it's very important, especially to the trade community. Thank you to Ann, thank you to Tim and Mike. Just if anyone is interested in learning more about the Byte platform, please feel free to visit our website at bytedata.io. And thanks again. We try and do these monthly, so we'll see you next time.
Take care.
Thank you.